Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So in today's video, I'll explain you 6 simple strategies of when to buy a stock, right? So this is one of very important topics to understand what are the areas to buy, what are different strategies that you can use to buy a stock, right? So let's get started with the video, and just a small disclaimer before that, anything discussed in this video is not a recommendation. Please consult your financial advisor before taking any trade. So let's get started. So this is the most basic question that comes to my mind: when to buy, right? So looking for the right entry is one of the most trickiest part of trading. Should we enter at the breakout or before the breakout or at the pullback, right? These are the kind of questions that come to your mind. And what if you miss your desired kind of entry? So what are the other ways that you can enter a stock, right? So just to give you an example, there are multiple ways to buy a stock, right? So you can enter at the breakout, you can take an anticipatory entry, that is before the actual breakout has happened, or you can enter at the pullback, and there are multiple ways. So this way I'll explain you 6 buy points that you can use, 6 strategies that you can use to buy. So there are multiple ways to enter a stock, right? So there are multiple ways to enter a stock, and all entries have their own pros and cons, and all of them may not work all the time. So here are some ways to enter a stock, right? So there are multiple type of entries that you can use, right? Multiple type of entry strategies that you can use, right? Like a base breakout or a trend line breakout, a pullback entry, a cheat entry, gap up entry, or entry at a swing high, right? So all these strategies have their own pros and cons, and all these entries could be available at a single moment in a stock, or maybe only one kind of entry might be available, or maybe two kind of entries might be available, and uh, they may not work all the time, right? So that is something that you have to understand, that all the kind of entries may not work all the time, and that is very stock specific, very price action specific, and you can use these multiple entries to look for the right kind of stock to enter at right time, right? So let's get started with the video. So first is the base breakout, and one of my most favorite kind of entry strategy, that is the base breakout. So base breakout is a simple breakout from a consolidation area, right? So there are three type of trends. We have an uptrend, we have a downtrend, and we have a consolidation, right? So usually what is happening during the consolidation, most of the time, in an uptrend, during the consolidation, big hands, the institutions are accumulating the stock, right? So there's a tussle between the buyers and the seller, and finally when the breakout happens, the stock picks up the direction, right? So basically that is what we are looking for. We are looking for the stocks that are in consolidation and are just about to break out from their base. The base length could be of any size, right? So here the base length could be of any size. It could be few days, few months, or few years, right? If you have watched my previous video where I explained the big base breakout, so this is just a variation of that. You can include the big base breakout in this strategy as well, right? So anything, any kind of base that is forming when a stock is within an uptrend, right? So after an uptrend, whenever the stock goes in consolidation, right, so that is basically a base formation, right? And if the stock is in a downtrend and then it consolidates and the trend reversal happens, that is also kind of a base formation. So any kind of base formation, right? So this is one of my favorite strategy. So here in this case, the entry is taken when the stock crosses the area of most resistance, right? So basically in a consolidation, we have 2 points. We have an area where the stock is facing the resistance, like this area, and we have an area where the stock is taking the support, that is on the downside, right? So whenever the stock crosses that area of the most resistance, the highest resistance, that is the point where we take entry, because we know that in the tussle of buyers and sellers, the buyers have won, that's why the price is moving up, right? So it is an area where the price has reversed multiple times during the base formation, indicating that there are sellers present, right? So there were sellers present at that particular area, and when that area is finally crossed, that means the tussle is over and we have picked up the direction. So that is the point where we enter a stock, right? So that is the first strategy, that is a base breakout. Again, as I said, the base could be the base length could be of any size. It could be few days, few months, or even few years. So in this case, entry is at the breakout, and the stop loss in this case, in maximum cases, would be at the breakout candle low, right? So I'll just show you some examples of what is a base breakout. So here is an example of a large base breakout, right? So this is a example from the recent, also from my recent video and one of my recent trade as well. Again, disclaimer, this is not a recommendation, right? So text, macro, real and infra. So this was a 6 month long base, right? You can clearly see this was a 6 month long base, and this was the point from where the price originally reversed. Then it was in a kind of a downtrend and it faced multiple resistance at this trend line, and then it finally crossed that. Then again it started coming up slowly, and then finally there was a breakout with good amount of volume. So that is the point where we enter the stock, right? So again, the stop loss would be at the breakout candle low, and you can clearly see the stock went up from somewhere around 230 to 284 in a matter of just few days. So this is one of the example of a bigger base, right? So we'll look at a example of a smaller base, right? So this is only a 2 3 month kind of a base, right? Again, stock gapped up, faced some resistance here, came down, consolidated in this particular range for some time, right? Consolidated here, faced the resistance here multiple times, and then finally there was a breakout. Again, the stop loss would be at the low of that breakout candle. Again, faced some resistance for few days and then finally moved up. So currently the stock is somewhere around 2800 2900. So this was a really wonderful breakout. Again, the size of the base could be anything, right? It could be a smaller base, it could be a larger base, although my preference is towards the larger base, but the smaller base also works really well. Another example of a smaller base, right? NTPC. So again, this is a consolidation of a 2.5 month or so. The stock was already in an uptrend, and then it consolidated, faced resistance here, consolidated for a few months, then finally there was a breakout, and then the uptrend continued. So in this case, my preference is more towards the stock that are already in an uptrend, right? There I'll be looking for the base formation, for the consolidation, and when the stock finally comes out of that consolidation, it could be a smaller one, it could be a larger one. That is the point to enter. Second, we have a trend line breakout. So stocks don't always move in a straight line. Sometimes they go up, sometimes they go down, right? So trend line is a tool that we use to identify the areas of trend reversal, or maybe take an early entry if we try to look for a trend line breakout, right? So trend line is just an area to mark the highs and lows of the price, because again the price always move in a zigzag manner, and if we want to connect the highs or the lows of the price, then we use something called a trend line. So what happens is that the price always, so it's the base formation is not always like this, not in a horizontal manner. Sometimes the price is moving down, but then again there's accumulation going on. Sometimes the price is moving in the upward direction, then also some bit of accumulation is going on there, and finally when the price breaks out from that range, it could be a descending range, it could be an ascending range, it could be an horizontal range, right? As I said, so a trend line breakout is mainly of three types: ascending, descending and horizontal, right? So any kind of range, whenever the price comes out, we use these trend lines to mark just the highs and the lows of the price during a range. So when the price crosses that particular trend line, that is kind of an indication of a trend reversal or a further continuation of the trend, right? So in case the consolidation is a downward one, descending one, right? As you can see in this example, here we have a downward trending trend line and downward trending accumulation kind of happening, right? So price broke out here and changed the trend. Sometimes what we have is that the price is going in a upward direction, and then it breaks the upper trend line and then accelerates, right? So that is in that case the acceleration is happening. Again, that is a entry point. So again, here we enter at the trend line breakout. So whenever the price breaks the trend line, that is the point we enter, and in most cases the stop loss is at the breakout candle low. Again, I'll show you some examples of that. So here is a example of two kind of entries available in a single stock, right? So this is again a recent example, Mishra Dhatu Nigam Midhani, right? So one we have a horizontal trend line and the other one we have a descending trend line. And how did I draw descending trend line? I just looked at the points from where the price reversed multiple times, and I just connected the dots. As you can see, this was the starting point, then I connected this point and I connected this point, and then there was a breakout from this range, stop loss at the candles low. Look at the volume coming in after that. Again, now the price is just consolidating in a nice range, and again getting ready for a large base breakout kind of a large base breakout and a breakout from a horizontal trend line. Another example, HBL Power Systems, again similar, both trend lines available here. We have a horizontal trend line, we have a descending trend line, right? So this was the starting point and it connected with multiple points from where the price reversed. Again, these were the three. So you need at least 2 points to draw a trend line, right? You can't draw a line without 2 points. You can't draw a line with a single point, right? So at least you need 2 points that from where you can connect a trend line, right? And then there was a breakout. So descending trend lines provide an early kind of entry, right? Although one downside is that they might have some overhead supply hanging there, right? But they provide a good early entry. Again, entry here, uh, stop loss at the breakout candles low, and again it's consolidating in a nice range. So this is an example of an ascending trend line where the price is going up, but the momentum is not there, and when the finally price crosses that trend line, then the momentum comes. And just look how beautifully it went up from just around 430 to around 640 in just matter of 5-7 days. And look at the volume also coming in, right? So in this ways you can also use the trend lines, ascending, descending, and the horizontal one for good entry point. Third one we have is a pullback entry, right? So after a base breakout, a stock temporarily pauses and reverses its direction, mainly due to the profit taking by the short-term traders or due to the overhead supply. So usually what happens, how the price action works is that the stock is in a consolidation, it breaks out from a range, and there are many short-term traders that enter at the base breakout point, right? As we learned in the first strategy, right? So many people who might be buying at the base breakout level, right? So those people, what they do is book some profits after some time once the stock has moved up according to their plan, like 10%, 20%, 30%, whatever their profit booking plan is. So what happens is that many people start booking profit, and the stock faces temporary supply pressure there and comes down. So that is kind of a temporary pause and reverses the direction. So then again, new set of buyers come in after that, and they resume the price in the upward direction. So that is the point, that is called the pullback, where you can take an entry. So this temporary down move is known as the pullback and is a really good entry point for the trader who might have missed their entry at the breakout, right? So in case you have missed your entry at the base breakout, so this is the point where you wait for the stock to form a small base here and then reverse from that point, and that is the point where you enter, right? So entry is at the reversal confirmation candle, right? So here what we have to do is we have to wait if the price is resuming its uptrend or not, right? So just give you an example, just to give you an example, right? So I'll draw a simple scenario here, right? So this is the base formation happening, stock breaks out, and what happens, it starts coming down due to the short-term profit booking, and it pauses, and then we get a confirmation candle, that is a bullish candle, green bullish candle, right? So that means the new set of buyers have come in and they have won the tussle, and since then the price starts moving up. Because sometimes what might happen is that there's no resumption of the prior uptrend. What happens is that the price start just keeps on coming down and down and reverses the trend. So that is the scenario of a fake breakout, right? So stop loss in this case would be at the reversal or the previous candle low, right? So here you got a reversal candle, you can enter at that reversal candle or maybe the day after that, and you can keep your stop loss there, or maybe at the candle of the previous low of the previous candle. So let me show you some examples, right? So this is, again, we had a trend line breakout here, and the stock went up from somewhere around 340 to 400 level, and then it faced a temporary pause because of the short-term traders booking their position, and then it pulled back, took support at the 10-day moving average. You can see the long wicks indicating that there's enough demand, and then we had a reversal candle. Again, as I said, reversal candle would be a big bullish candle, as you can clearly see in this case, right? So here the entry would be at this candle, and the stop loss might be somewhere around the low of this candle or maybe a few points below this candle. Another example, so we had a base formation here, and then there was a breakout, a very strong one with good volume and good candle, and then short-term profit booking come in, and then you can clearly see the price decline for next 5-7 days, but again took support at the 10-day moving average. So in case of pullback buys, do take advantage of the moving averages, especially the short-term moving averages like the 10-day moving average or a 21-day moving average. And then we had a reversal confirmation candle, right? and look how beautifully the price went up after that. Look at the volume as well. Another example, Realtel Corporation. Again, this was a big base breakout that happened here, and just look at the volume at the base breakout as well. So again, the very next day, some profit booking came. The price pulled back, took support at 10-day moving average, started going up, and just again pulled back. And today you'll see it has given a very strong breakout, and it's at 600 plus or so. So then we have a fourth type of entry, that is a cheat entry, right? So this is a type of an early entry point where we look to buy the stock within the base itself and below the actual obvious resistance level. So in case of a cheat entry, you're not waiting for the stock to break out from the base. Trying to look for an early entry point that is within the base itself. Here you try to go in early to capture the whole move with a low risk, because again you get a smaller base within the big base breakout. Here you'll get a early entry. First of all, you'll get a early entry, few more points of move. Then plus again you have a lower risk as compared to, because again big base breakout also fails sometime, right? So again you'll have a smaller risk, and you can also use the big base breakout as a point to pyramid to your existing position again at the cheat pivot breakout. So here the entry would be at the cheat pivot breakout. So cheat is simply an area within the base where the stock is just consolidating in small range, and then it breaks out and then it's head up, right? So your entry would be there, and again the stop loss would be candle or the cheat base low, right? So I'll better show you with some examples. Again, here is a really nice example of pullback under the cheat entry as well, right? So again, the stock came out from a base and pulled back and formed a little base here, and again we are not waiting for the stock to cross this previous high level, right? So again, it pulled back towards the 10-day moving average, reversed. So this could be a pullback buy as well. Again, a small base formation that happened here. That was the cheat entry, and then boom. Another example is a really nice one of KPI Green Energy, right? So one thing is clear, that the big base formation is going on, and this is the obvious level of resistance from where the price has reversed multiple times, right? And this is a very nice support level that we have. So again the price is going up, and you see price is forming a very nice short term kind of a base. Just look at the size of the candles that are there. That is within the larger base. So here what you do, you have a very low risk, because again you are taking an entry when the stock comes out of this very narrow range, right? And you keep your stop loss at the below of this big candle. Then boom, just look at the how the price went up after that. Another example is a really nice one, IREDA. Again, so this was in a uptrend. The price pulled back, formed a very nice base, a very small base within the larger base. So you're not waiting for the stock to cross this previous swing high. You're just buying the stock when it's just consolidating in this tight range, and then there was a breakout, and the risk was quite low in this case. And then just look at the direction of the stock. So the fifth type of entry that we have is a gap up entry. Okay, so this is the type of entry that is taken when the stock suddenly gaps up due to an event, earning split, macro event, press release, or anything else, right? So in this case, what you're looking for a gap up, you're just simply looking for a gap up. And if you don't know gap up, I'll leave the link of my gap up video in the description, or you can check at the I button as well, right? So here the entry can be taken in multiple ways, right at the gap up and or maybe at the retest of the gap. So let me show you some examples. So again, we have the same example, HBL Power. We had a descending trend line breakout here, and then we have a gap up entry here as well. Again, a cheat entry as well. So there were multiple type of entries available in this particular stock few days ago, right? So again, you see the stock gapped up due to some news or event or so, right? So that was your entry point. And here in this case, usually the stop loss is uh, at the gap boundary that would have been hit in this particular case. If I show you some another example, so Bhagirath Cam, again stock gapped up with very high volume, and your stop loss would be just below this gap boundaries, right? And again, another example is RCF. We had a cheat pivot here as well, and we had a pullback entry as well, and multiple type of entries are available in a single stock, as I said earlier. So again, there was a gap up. What you do, you buy at the gap up candle if possible, and you keep your stop loss just somewhere below the gap candle. Again, the price moved well, pulled back again, went up, and without even touching the stop loss. And the last kind of entry that we have is a swing high breakout entry. So I skipped a little bit in case of the gap up because I have a separate video for the gap up, and I'll leave the link and you can go through that. There I have covered the gap in detail. Okay, so in this case of entry, the entry is taken when the stock is already in an uptrend and has broken out from a large base, right? So again, we have a base breakout, we have a pullback, and then when the price reverses from that level and crosses the previous high, that is called the swing high. So that is the point where we enter the stock. We're not entering at the pullback, we have missed the big base breakout entry, but we are entering the stock when it crosses the previous swing high, right? So as the stock moves in a zigzag manner, the upper end is called the swing high and lower end is called the swing low. So after the base breakout, when stock pulls back, then again goes up crossing the previous level or within a range, when it goes forms lower highs and then again comes back up to cross that level, that is also called a swing high breakout, right? So in this case, let's say you have a base formation and the price is moving like this. So this is the obvious resistance, but these are the areas of the swing high. So whenever the stock crosses the swing high, we can enter the stock as well, right? So again, a good example here would be polyoxides and chemicals. So this was big base breakout, price pulled back a little, right? And then we had a pullback and reversal candle, and then the price finally crossing this swing high, that is the from the point from where the price reversed. So if I show you the example of this particular stock in the real time, so currently it is breaking out because as I'm making this video during the live market, right? So again, it tried to break out, although a strong selling came in because the closing does not look good. But again, here it shows you that these concepts work. So these are the 6 kind of entries that are available in a any particular stock, right? Like you can take at any moment, and a single stock can have multiple type of entries available at a single time, right? So here in this case, we had a trend line breakout entry, then we have a big base breakout entry, we still have a horizontal line entry available, then we had a gap up, and we also had a cheat entry, right? So there could be multiple entries. Your job is to identify what kind of entry works in what kind of scenario and in what kind of stock, right? So again, it would be different for every stock and maybe similar for every stock as well, but depends on the overall structure of the that particular stock at that particular time. So that was it for today's video, and I hope you learned something new. And if you enjoyed the video, don't forget to like, subscribe and share. Goodbye, take care, see you in the next